Are home prices in North Carolina going to continue to go up in 2024 and 2025? And is this a good area to buy a house right now? Those are the questions I'm going to answer for you in this video, and I'm going to do it with data. Well, we can see the data is saying that home values in North Carolina have absolutely exploded over the last 7 to 8 years. You can actually see values have doubled from 2016 to 2024 levels, and prices have actually continued to appreciate since mortgage rates have gone up to 7%. And that's kind of funny, everyone. If you're a buyer investor in North Carolina, particularly a city like Charlotte or Raleigh or maybe Greensboro, you're saying to yourself, how is it these prices are still going up when it's becoming so unaffordable to buy? And the answer to that question has everything to do with inbound migration and people moving to North Carolina. Because over the last couple of years, North Carolina has become what I call a migration all-star. Tons and tons of people are moving to the state. With inbound migration into North Carolina totaling 127,000 in 2023, you can see that this was the third or fourth highest migration level of all time, going back 30 years, again, meaning lots of people moving in, with North Carolina ranking as the third highest migration state in America, behind Florida and Texas. And so you have lots and lots of people moving to North Carolina from New York and Florida and California with some money, pushing those prices up. However, here's the thing, everyone. We're starting to see some cracks show in the armor of North Carolina's housing market. We're starting to see a bit of a slowdown in this demand of people moving in 2024. And that slowdown in demand, it's causing the inventory of homes for sale on the market to spike. And when the inventory spikes, that's the signal of a slowdown and that things could get better for you as a buyer around the corner. Because for instance, I want you folks to take a look at Charlotte here. We have a metro map of North Carolina. We're going to focus on Charlotte right now. We'll look at some of these other areas in a second. But in Charlotte, you can see that there's 5,300 homes on the market for sale in 2024 in the middle of the year. This is now almost back to the long-term average of homes for sale in Charlotte over the last 7 years. So there's really actually no longer a major inventory shortage. And that's an important thing to understand because I see a lot of realtors out there, they try to say inventory is low, inventory is low. Well, not really in a market like Charlotte anymore, anyone. And that's a signal that we could start to see prices drop in certain neighborhoods. Particularly the ones in red on this map, everyone. The ones in red, they're the ones where the inventory of homes for sale, the supply has gone up the most. So if you see red on this map in Charlotte, if you see your zip code in red, that's a surplus of homes is now hitting the market. Whereas if it's in blue, if your zip code's in blue, there's still a shortage. And so if you're still in a shortage, price is more likely to be stable or go up. If you're in a supply glut, like these areas in red, price is more likely to start dropping. And we can see, interestingly, that these differentials in inventory exist even in a market like Raleigh as well. You can see in Raleigh, if you were to just draw a line down the middle of the metro, you can see on the west side in Cary and some of these wealthy suburbs, inventory is still very low. Whereas on the eastern side of the metro, inventory has spiked. Like in 27610, we now have 147 homes for sale, which is the highest level we've seen in the last 7 years by far. And so the key for you as a buyer or an investor or a seller in North Carolina's housing market is understanding those inventory trends and understanding kind of what the price forecast is for your market over the next 12 months. Because this is going to help you avoid making a mistake as a buyer, seller, or investor. I know if you're a buyer or investor, the last thing you want to do is buy into a market near the top and then see prices go down 20 or 30%. Right? And see your down payment wiped out. No one wants to see that. Conversely, if you're a seller and you're listing your house, you need to know the type of market you're listing in so you can price your house well. And here on Reventure App, which is the program I've been using in this video that I actually built and it's available to you all, you can see we have a home price forecast score. And you can see actually that there's some interesting differences in these home price forecasts throughout North Carolina by metro and by county. And the general idea is if we see blue, like in Johnston County, that's more indicative of a declining market due to the trends in inventory and price cuts and days on the market, right? So if you see a market like Johnston County, southeast of Raleigh, we have a home price forecast score of 43. And that's 43 out of 100, which indicates price is more likely to drop. We've gone from a big seller's market to more of a buyer's market due to the trends in price cuts, inventory, and days on the market. And so if you're a seller or a buyer here in Johnston County, understand that the situation has changed significantly from a couple of years ago and that the market has softened. Now, conversely, if we go to Beaufort County on the East Coast near the beach, we can see we got a home price forecast score of 60, indicating price is more likely to go up. There's still a big shortage of inventory in Beaufort County. And at the end of this video, I'm going to give you guys a link where you can go to this link and check out those home price forecast scores for yourself for North Carolina so you can make a more educated decision. However, I want to issue just more like a broad warning about the North Carolina housing market right now, across the state. And that's the fact that, all those people moving into North Carolina from the wealthier states like New York and California and Florida, they've pushed the prices up to a level that the locals can no longer really afford in North Carolina's housing market. And that's an important point to understand, that many of the locals in North Carolina who grew up there and who've lived there for a long time, they are now priced out of the market. So even though North Carolina still looks affordable for a New Yorker, it's starting to look very expensive for a local. And that historically is the sign of a bubble, everyone. When the local buyer is priced out and can no longer afford to buy and get a mortgage, that's the problem, because if we see any type of dip in the migration, then you say to yourself, like, well, then who's going to step in and buy? So I want to show you something, folks. The median household income in North Carolina, I mean, can you guess how much it is? How much people in North Carolina make? Well, it's $72,000 a year, which is below the US average of around 75,000. So North Carolina, it's a middle to actually below average income state. And these income levels, they have improved over the last 4 years. I mean, just 4 years ago, the median income was 57,000. However, the problem is that the home prices have gone up much faster. The home prices have gone up much, much faster than the income. And so here's the result, everyone. Take a look at this. Take a look at a metric called mortgage payment as a percentage of income in North Carolina. You can see now that the average buyer in North Carolina needs to pay 37% of their median income on their mortgage payment. And this 37% payment ratio, I mean, we've never seen anything like this in North Carolina's housing market. In fact, before the pandemic in like 2018, it was 21%, 20%. So North Carolina was actually truly affordable before the pandemic. Locals could spend 20% or less of their income on buying a house. Now it's 37%. This isn't sustainable, folks. This is not going to last. This lack of affordability in North Carolina for local population. This is going to come down, this payment ratio, and there's basically three main ways that payment ratio can go down. The quickest and easiest way is for prices to go down. Prices go down, that helps solve a lot of problems. The second way is mortgage rates going down. Unfortunately, it doesn't seem like mortgage rates are going to go down anytime soon. The Fed seems to be keeping rates higher for longer. Third is that incomes can go up. But the issue with income growth is that, it takes time. I mean, incomes grow maybe 4% a year, 5% a year, not fast enough to fix the affordability, which makes me concerned that North Carolina's fairly overvalued housing market. Prices are 24% overvalued in North Carolina. I think this presents potential for a lot of downside should the inventory levels continue to increase. Particularly in a market like Charlotte, everyone. Charlotte is 34% overvalued compared to its long-term norms. This is a market that used to be super, super affordable. It is no longer that way. It's starting to get expensive. You can see a market like Greensboro now, even though it's much more affordable than Charlotte, is expensive compared to what it used to be. Greensboro is now 26% overvalued. I think we have some price downside in these red shaded metros. Now, interestingly, if we shift to the county map here, we can see there's actually some counties on the coast here which aren't as overvalued, like Onslow County, Pender County, Brunswick County. Prices aren't as overvalued in these areas. Like in Brunswick County, prices are only 4.6% overvalued. This is just north of Myrtle Beach. One reason is that values didn't recover from the last crash until 2021. So, historically, the prices actually aren't that high here. So maybe we have more stability in Brunswick County. If you're someone who's an investor, maybe you look more in this area here while avoiding maybe Mecklenburg County or Gaston County or some of these areas in red, which could have a lot of price downside. Of course, just because an area is overvalued doesn't mean it's guaranteed to crash. It just means that there's more risk of price declines. It also means that it's less likely that prices are going to continue appreciating into the future because the local population who's buying, they're too priced out. And so it's just going to be harder and harder to achieve appreciation in an overvalued market. And one thing you really need to do if you're a buyer or an investor in North Carolina is understand those overvaluation rates, number one, but then also understand the home price forecast for your area in North Carolina. And luckily, if you go on Reventure App, www.reventure.app, and search your city or county, you can then go to look at the home price forecast score under a premium plan and see what the home price forecast rankings are. Are we seeing downward arrows or upward arrows in your county, in your zip code? You can see this home price forecast score is ranked out of 100. So if you see a score of 58, that means it's more of a seller's market, more likely that prices go up. Whereas if you see a score of 38, that means it's more of a buyer's market, more likely that prices go down. With all this data also available at the zip code level, so you can see what the trends look like in your neighborhood specifically, head to www.reventure.app right now to access that data under a premium plan. The cost is $39 a month, which is ultimately an affordable price compared to the cost of buying a house, so you can have a peace of mind and understand where the market is heading.